Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today we're going to discuss how to avoid the IRS hobby loss rules. All businesses, except those run by C corporations, are subject to the hobby loss rules. These rules prevent taxpayers from receiving a benefit by deducting expenses related to a personal hobby. The IRS defines a hobby as an activity engaged in without a profit motive. For example, if I build model airplanes for fun in my garage and occasionally sell them at a loss, the IRS would likely consider that a hobby. If the IRS says your business is a hobby, all income will still be reported on your tax return, but your expenses will be limited. Deductible business expenses will only be allowed as itemized deductions. So, if you take the standard deduction, your expenses will be completely lost. Your expenses will also be limited up to your business income, meaning you will not be able to take a net loss from the activity. Obviously, this is one tax outcome you will want to avoid. To avoid the hobby loss rules, you should follow the 3-year rule, pass the facts and circumstances test, keep good records, and delay the ruling. For most activities, if the owner shows a profit at least 3 out of every 5 years, the IRS is unlikely to claim that your activity is a hobby. Sometimes, even an unprofitable activity will still be considered engaged in for profit. The IRS looks at each activity on a case-by-case basis and considers the following criteria to determine whether the activity is a hobby or a business. The IRS considers whether the taxpayer is an expert in their industry or whether they're qualified to perform the services of the business. Does the taxpayer invest time and effort into the activity? Are the business's assets likely to go up in value? Has the taxpayer been successful before in operating a different business in the same industry? Is the business in a short-term slump? Can the taxpayer afford to take the business losses? Has the taxpayer made investments in the business? Is this an activity that's likely designed to provide entertainment for the taxpayer? It's important to keep good records that show you're conducting the activity in a professional and businesslike manner. Helpful records to pass the facts and circumstances test include proof of advertising, hiring employees with expertise in your industry, or consulting experts, accountants, or marketing agents and applying their advice to your business, maintaining separate bank accounts for business and personal, good bookkeeping records for the business, meal and entertainment logs for entertaining prospective clients, mileage logs for the use of vehicles, subscriptions to professional journals, or membership dues to professional organizations, or a written business plan. If all else fails, you can file Form 5213 with the IRS to delay their ruling until the 5th year of business operations, which may buy you a little time to make the business more profitable. At AA Accounting, we have over 60 years experience helping small business owners succeed. Call us today to see what we can do for your business. We look forward to working with you.